Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Wednesday, June the 22nd, 2011. Well, a continuation of the trend to the upside today. This candle has made a higher high and a higher low. Unfortunately for the bulls, the bears have taken control of this market. So the short-term dynamics or supply and demand are not supporting this trend to the upside, so we now are in danger of this trend changing. We highlighted yesterday that we were trading within this large zone of resistance that extended from the bottom of the rejection of these candles, and that's near the top of these candles, which is about 1287, up to the round number 1300, and for today's trading we've seen that price rejection. So the market did test a little bit higher, tested up to almost to 1297 to 1298 in fact, and the sellers came in. So that is a very big number for this market. Previously it held as very strong support and resistance prior to that. Now with the bears being in control, showing some good commitment on the day, they still haven't changed the trend though, so we do need to be aware of that. The trend is still up. So the 1300 number is still in play, and it still is a very important level for the market. So we have to be very wary of that area when the market begins trading tomorrow. Now, just looking at the Ichimoku indicators, the Kijun Sen here, the pink line has turned flat, and very often when it turns flat, price action is attracted back towards there. And that's what we've seen, it's turned flat. So even though the short-term dynamics aren't supporting the attraction back towards there, we did have the high take out the previous high and the market attempt to retrace back towards there early in trading. So do be aware that there is still a small possibility that the market will test up to around that area. Having said that, however, we really do need to watch the low of the current candle for a potential lower high and a lower low, which seems the most likely scenario for this market, that the market will begin a new downtrend. If that does happen, obviously there is some support at 1280. We can see here previously with these two candles that the market tested that area and there was some rejection from there. Stronger rejection on the first candle that we're highlighting, not as strong on the next, and then the market broke out of that area, but that will potentially offer support for this market at 1280. Strong potential support at 1275. That was an area from some time ago, and we can see that there was a lot of indecisive trading as the market was attempting to trade through that area previously. Certainly 1265 is a strong area, and down to the swing low around 1258 is an important area. Now, the market maintains an overall negative bias in big picture terms by trading down below the cloud, and we can see that we had that bearish breakout some time ago, and we're still trading down below the cloud. We did have the market trade above the Tenkan Sen, which means that the market is bullish in the fast-term time frame, and we still are trading above there. So the market maintains that bullishness in the fast-term time frame, even though we have had the bears take control of this market. The market is still bearish in the medium time frame by trading down below the Kijun Sen here. And just looking at the Chikou span here, that is below the corresponding price action, and that is reinforcing the negative bias overall that we have in this market. So for tomorrow, certainly watch the area around 1300, very important level, but watch the low of the current candle, which is at 1286 for a potential lower high and lower low, and a test down to 1275.